Okay. Alright, let me put the chat up here. Do I want a timestamp or something? Alright. Okay, I'm live. Okay. Let me. That's so weird, man. Alright, guys. Let's do this. I know by now people are having a fit of what this company has been doing. It's going under. Is it? I don't know. We will see. Hold on, let me. Hey Michael, what's up? Happy Easter! Happy Easter! I don't know. I don't celebrate Easter, but yeah. Happy Easter. I wish you have like Monday off. That would be amazing. But what are you guys doing on Easter? Hunting eggs for kids, I guess. So I mean, I don't have kids, so I don't, pay attention to those holidays. But yeah, happy Easter. Alright guys, so let's get to it. I know most of my viewers are going to watch after this, after my live. And I appreciate you, Michael, for joining. Now, one of the things that I am, happy Sunday then, yes, happy Sunday to you. Let's see. So one of the things I was looking at is the volume, right? And the volume for Gamestop has been picking up lately. Now, when I said picking up, it's like 10 million shares being traded here. But if you look at the Yahoo Finance one, and one of the things I noticed too, like if you were to like go on to GameStop, like just Google it, right? You would see like crazy, wait, that's not it. You would see something here. I'm like, why is it not updated yet? So the financials over here has not been updated. I mean, like, I don't know. To me, Google should be the one that noted first, right? Like, who update this? It's so weird to me. Now, I haven't paid attention to any other stocks, so you might have a different. This might be normal for Google not to update the new stats already. But yeah, how long has it been since the earnings? Yeah, like 3 trading days and then weekend. Now I understand that people don't work on the weekend, but really it takes this long to update this simple stat. I thought they would just automatically doing that. So is that a suspicious thing? But hey, we all know what the result is. Now let's look at my goodness, I just feel like sometimes. Wait, hold on, somebody's texting me. Okay. Sometimes I feel like, is there a concerted effort to kind of suppress this, like even online too, right? Who knows, right? But anyway, so all of the news coming out of the woodwork, saying the demise of this company, not doing well, it's unsustainable, sales decline, Do they have a point? I don't know. All I know is that if the company is making money, even if the sale is declining, are they going bankrupt, right? They just need to pivot to something else, which we already had been pivoting to, being a holding company instead, right? And I think that's a good strategy to have moving forward, correct? In my opinion, anyway. But, if you only just take in account the sales aspect of it, I'm not even looking at the wild card right now, right? Just so, to me, this is the focus. Is the balance sheet itself. Like, is it doing well? And in my opinion, it's doing much better, right, than we used to be. Now, when I said much better, it's like, for these people, of course, they want like a 100,000% increase right away, right? It's like, to me, like, if you want to turn around a business, it's gonna take some time. Like, calm down, right? Calm down. And of course, like, I don't want to be overhyped about this company either, because yes, we do have challenge ahead of time. That's why Ryan Cohen is here, saying the first thing he was saying as a CEO, buckle up, right? It's going to be a long run. It's going to be a long journey to profitability. And long journey for him, it was what? 6 months after he took over, it was profitable. I mean, come on. Like, what more can you ask for the guy to do? And of course, 2 years after that, 2 years before that, it was Matthew Furlong who was able to kind of like make this company at least cleaning the book up, right? So I'm not gonna take a look at this, but let's just compare year to year real quick here. So I did this. Hi. So the green one is the fourth quarter. So I want to compare fourth quarter real quick. And then we could go to the first quarter here in a minute. So 3 years ago, let's take a look at, I want to compare the year since Ryan Cohen got in. Now I know, like, it's not all about him either. There's people who work with him, and people who work at Gamestop are the ones also underground working really hard as well. So shout out to them as well. Like, I don't mean to just focus on Ryan Cohen here, but just to be fair, of course, like, under his leadership, that's what I'm looking for, because that's what people, up in arm about, how, he's not doing enough. Like, okay, so let's do a comparison here. So this is just a quarter end right here, quarter end, right? So fourth quarter, and this is the most recent one. And I'm interested in like kind of like doing the prediction right here. Of course, like, this is just a prediction. Anything could happen at this point. But let's look at compare quarter to quarter. So I think this is when he wrote I don't think this would count for Ryan Cohen, because Ryan Cohen didn't get in here. Based on the letter that he sent to the board of director when he bought into a 10% stake in GameStop back then, this is the quarter that it was post. So that quarter we only made like a positive of $21 billion, right? And so ever since then, so when he got in, the next quarter we were able to do 80 million, right? So technically you want to kind of measure up to here, right? Now of course, like, we have more sales and all that stuff, but back then we had more store, right? Oh, actually I should have put the amount of stores up there, but shoot, I didn't prepare for that. Later on. Hold on, let me read the... Hi Lionel, hi Great Bill, thank you for joining. When they try to beat it down, that's when it's time to buy. Yeah, of course. Like, oh, actually, Okay, so let's go back to what I was saying about the volume. So let's stress the volume real quick. So this is a Yahoo Finance, obviously. Now Yahoo Finance did update the whatever the earnings here. So if you go to see that, you could there you go, a little bit smaller. Right there. So that's good to see, right? At least it's being updated. Of course, Yahoo Finance is famous at kind of like shitting on GameStop. Most of them, anyway. But what I've noticed is that the volume got picked up, right? And so is there going to be a kind of a storm brewing here before, calm before the storm type thing? But as far as like the price action, I mean, they want you to believe that people are selling left and right? But if you look at the on-balance volume, as I shown before, it's not going down, right? And the comparison is there already. If you look at that, see, right here, like the amount of buys exceed the amount of selling, right? So if you look at right there, that blue line, right? So if people were to sell from here to here, this line should have been over here already, right? Or closer to that. So that means, again, the selling pressure it's not coincide with that. But also too, if you were to compare that to AMC, you would know the difference. Like you would see the stark differences. See, this is indicative of people selling. When people are actually selling, this is what happened, right? Boom, the volume kind of precede that too. And if you take notes of the amount of right here, the volume, right? A lot of shares being I guess like the selling pressure right there. So again, like I could be wrong about this indicator, but I think it's worth noted, right? This discrepancy of the volume versus that. But that could be due to the dilution as well. But that dilution is being sold to the public. We all know what's happening in AMC already, so more dilution is coming. It's going to be a $1 stock from here, right? Keep in mind that's 10 cents. And so, coming Monday, if the price is at this low, I just do the shareholder equity thing. If you do the book value right here, book value right now, it's even increased divided by the current share price. You would see, yeah, that's insane, right? 35% equity, shareholder equity book versus the actual price. So to me, hey, if 20% sounds great to me, then 35% is even better, in my opinion anyway. Do what you wish to do with this company. But anyway, so I promised to do a deep dive on this one, or a closer look, right? So these are the years in which Ryan Cohen kind of have any influence on the actual balance sheet itself, right? Of course, like 2 years before that, it was Matthew Furlong. But if you see the progression of improvement in terms of what is actually mattered the most, which is the income, then I think this company is doing much better. Hold on, let me see if I could. Don't color it well. Okay, so, and look at this, like the growth of, I don't know how they come up with this number, honestly, so it really doesn't matter here. Let me clear out this row here. You could do the percentage yourself, like if you want to do this to year on year, right there. But anyway, now the operating expenses, obviously we were able to kind of decrease the operating expenses because we don't have many stores left anymore, right? The amount of stores that is being open was not warranted, meaning that if you have too many stores, you're gonna have too many liability, too many employees, whatnot, right? And I think tomorrow is going to be that $20 an hour pay increase for fast food restaurant. I don't know if it's going to apply to GameStop as well, but we'll see, right? And so I think leadership was trying to kind of front run that decision, I bet. That's why, like, if you had the store open, the massive amount of stores open, you're gonna have to, it's gonna cost more to operate. So the operating expenses would have been a lot higher, and this one is going to be a lot higher, right? Because of the increase in labor costs and all that stuff, right? So it's gonna be taken account that. And so I think the decision to close more stores is it had to be done, right? But traditionally, if you were to look into any other stocks, anytime they announce job cuts, workforce cut, anything, right? Expenses cut, the stock usually goes up in price. But for some reason, anything good about this company, they drive the stock price down. You just have to look into it a little bit more in detail here. Again, it's actually good for the company to cut down to size like this. But it's necessary for the profitability of this company, right? Because the amount of sales that we're able to muster up is not going to be profitable if we have, 1,000 more stores to open, especially when labor cost is going to go higher in the future. But in my opinion, obviously this is the most important line that people should be focusing on, right, at this moment in time, obviously. Here we go. I mean, if you look at this one is also important as well, in my opinion, because this is why it's so important to have a cash on hand, so to speak, or marketable security, having a cash position that is kind of making us money in terms of just interest, right? Because if the Fed is not lowering rates, then it's much better to have that money working for us in that sense. So $15 million per quarter, that's nothing to scoff at, right? When we used to have only 1 million there, and then lower here, even losing the income for this one, even though we have the money to do that, right? So last year, same quarter last year, we only get $6 million for interest. Now we have 15. So if the Fed is going to keep the rate higher for longer, not lowering it, we're going to be able to kind of technically get another $15 million this quarter as well, or this coming quarter. But that's, again, depends on how much marketable security is still in there. From what I saw, it was like 270, right? $277 million still in the marketable securities. So compared to last year of the same quarter, we had 250, I think 253. So technically it would be more in terms of interest income. Hi Manuel, thank you for joining. I don't know, but so those are important. Obviously we don't have any interest expenses because we don't have any debt to pay into the interest payment. Remember, we used to pay let me see, like $57 million a year on interest payment alone. So that's why it's important not to be in debt, not to overextend yourself in this environment, right? Imagine if you have to, pay that interest and we come out, like that eats up into your net income as a company. Right there. Let's see. Of course, there was some dilution here. No, share compensation, something like that. Net cash, there was some cash burn there. Now, I hate to say cash burn. Obviously, they're using it in the right places, right? In my opinion, right? Paying, something down. I think account payable or something. So, now, earnings before interest and tax, right? This is good, right? At least they're increasing in terms of earnings before interest and tax. So we want that. As far as like profit margin, if you look at the year before and the year before that, we were able to even come ahead of the year previously before Ryan Cohen got in, right? So the profit margin has increased, you guys. So I don't know how people keep saying that this is like not a good thing, right? I think they're just projecting the fact that the revenue, like that's all they're focusing on is revenue down. They are trying to project it down again. Hold on, let me see, where did I? This one right here. So I mean, if you do an EBITDA thing, of course, like this one is kind of like too much already because it's like earnings before amortization and depreciation. If you take that number, we are even better, right? But I want to see this positive in the year. Currently, we're still in the negative on the EBITDA. EBIT, right here, because it doesn't, take too much down. I hope that makes sense. Like there's no depreciation and amortization, all of that shenanigans. Traditionally, you want to see this positive right here. So this quarter, obviously, we are able to increase our profit margin by 1%, 1 whole percent, and a little bit more, right? Compared to the next one, even 2 years ago, we were negative 6%. So, but even much better than 2020. So that's a good thing. Sorry. I think I just altered that. Okay. Now, cash position, obviously, we are able to increase back then. We were doing a lot of dilution. No, that's not what I meant. We were able to raise a lot of money, when we were running like crazy, but that was a smart thing to do. That's why we were able to get, $1.6 billion to move forward. And this cash, yes, it was from that fundraise, but it was at marketing ad market offering to retail at the time, and retail was able to kind of retail was happy to buy GameStop at a high price, and the company was able to make $1.6 billion from that, right? So ever since then, we kind of depleting it a little bit, but look what we have been able to do so far. Yes, we use the cash, but where are we using it? I'll show you in a minute. And this is why the people, you're burning cash. We're burning cash left and right. But compared to what other company are doing, I think we're using that cash the right way, in my opinion, anyway. Keep in mind too, we were able to pay off debt, like $300 million worth of debt, with that money. So technically, how much did we actually use that cash to, right? So from 1.67, right, to now is, so that's 450 whatever, $467 million so far. That was depleted. So let's see how much of that we got back, and shareholder equity. Okay, so let's look at, of course, we don't have any goodwill. Some tangible asset here, or intangible asset here, but we don't have that right now. I bet that was like crypto or something like that. I don't know. That might be it. Current debt. Let me see. Total asset. Manual. Are you holding GME expecting Ryan Cohen to turn the business into a holding company, or are you holding expecting the related to the gaming? Both. I mean, the company, whatever the company is doing is going to be beneficial for the shareholder. Yes. I mean, as a shareholder, I have been following this company since, Robinhood holding the buy button. So that's when I got in. Not at that point. Of course, I gotta learn about it first before I got in. But when I got in, I see the possibility of a turnaround story here. And on top of that, yes, like the short interest and all that stuff was captivating to me, right? But as I stated before, when I got in, I knew that this is going to be a long drawn out process to actually turning this company around. As far as the business of the gaming itself, yes, I mean, to me, 10, 20 years from now, we might have a different conversation, right? But right now, it's challenging for GameStop to be able to do what they're like, to turn profit from all of that BS is a improvement that I like already, right? Yes, it's a small improvement, but to me, again, like I like the story of the company. Now, Ryan Cohen, in my opinion, has done amazing for this company, right? I mean, what do you expect the guy to do? It's like $100 billion in a quarter? Of course, like the business itself as a retail, everybody is struggling right now, right? And the fact that he foresee, what's happening, and even like restaurant. Look at the restaurant. Look at the discretionary spending for individual customer, right? Is abysmal, because people are not doing well as people on the Wall Street tell you to. I mean, if you look at the news, like, the economy is doing better. No. Look at the rent. Look at the price of food. Look at the fact that now millennial, I don't know if you've heard of this one, are having to do a buy now, pay later in order to pay for rent. And that's bad. Nobody have money to do anything. And again, this is the economy in which every industry is struggling right now, right? Now, of course, like high tech and all that stuff, they want you to believe that chips is going to be, AI is going to be that. But I think AI is overblown already. In my opinion, the best time to buy into Nvidia and all of those, semiconductor chips and all that stuff was 5 years ago, right? The best time for me to get into GME is right now, in my opinion, right? And so, for GME to 10x from here is so much easier than, Nvidia to 10x from here, in my opinion, right? So if you think, you could 10x your money in 5, 6, 7 years in Nvidia, go ahead, buy Nvidia, right? Go ahead, buy Apple, all of those big chip stocks that you're, much more that. But hey, the reason why I invest in the market is to hopefully beat the S&P 500, right? And so, that's why I, learned to pick individual stocks and all that stuff. Is it, in my opinion, this is again all my opinion here, this company has a long way to go, right? And have a longer time horizon, so to speak, right? And this is the best place to be. Again, it's all my opinion here. I'm not a professional anything. Hi Jay, what's up? Why are you here, Benjamin? It's probably a short. I don't know. Thank you for answering the question. Of course. We believe in the company and the community. All right. Jay's coming in hot. I love following retail investor on YouTube. Okay. Yeah, I mean, look, we're all here trying to learn something here, right? And of course, like all of these negative sentiment has been overblown, right? And I know, like, I don't want to be hyped up either, because then, I might be, too involved in it, and I don't want to be in an echo chamber, and so to speak, because that's dangerous for anyone to be in as well. As far as like being a cult and all that stuff, that's one thing, right? Of course, it's a fun thing to say, hey, I'm in a cult, because like we've been in the company for a long time, and we believe in the company and the turnaround story that people don't want to kind of like, at least from my perspective anyway, the news media seems to have this, kind of jump on one stock, so to speak. And that's why I cover it, based on the sentiment that comes out of this company, right? Any time you have good news that comes out of this company, they always say, oh, this company is going to die, right? All of this. And then, you have people, like this one, the day before earnings, comes out and kind of like put GME along with all of these quote unquote meme stocks, right? And so, that's a story that I've been kind of following as well. So all of those things, in my opinion, are the added value. The company itself is doing much better, right? The company itself is not like one of these like massive growth company that you are going to make a gazillions of dollars from it at this moment in time. Yes, in the future we might be able to grab at least, I mean, I would be happy if GameStop could double their market cap. Double their revenue at some point. At some point we're going to be able to do that, right? But right now we need to take care of the income aspect of it. There's no reason to make a gazillions of dollars when you can't keep any of it. You see what I mean? And the reason why Wall Street love the top line revenue so much is because, in my opinion, they're lazy. They don't want to evaluate the company based on the health of the balance sheet whatsoever, right? All they need to know is like, oh, how much money are you making? Oh, if it's increased by 10%, okay, yes, let's promote it, right? But they don't want to take time to analyze the company. And I think most of the analysts are like that, right? On TV anyway. They just like, again, they, in my opinion, they don't even know how to evaluate the company, correctly. Again, in my opinion. Nothing against anyone. I'm just kind of like seeing that, and okay. But I mean, when I look into this, the fact that we're able to increase the profit margin, which is the one that we are looking into, or anyone should be happy about, is the profit margin, right? Amazon, was able to do it incrementally, slowly, for decades before Amazon became Amazon, right? So why can GameStop do the same thing? I mean, Ryan Cohen has been demonstrating that he could do this for 3 years already. But again, like, why this guy? Why? Oh my God, I lost my train of thought. Oh, you see all this Yahoo Finance and all that stuff, and talking about how Ryan Cohen is a failure and all that stuff, or the worst company in the world, in America, right? But yet, if you look at AMC, Monglan Automotive, and all that stuff, you see they don't say that about AMC. They don't say that about, WeWork. How about WeWork? That's not the worst company in America, no? But GME is? Really? And they post positive earnings. Like, come on. Ay. Okay, Apple was an echo chamber. Yes. I mean, at one point, Apple was a penny stock, right? Like in the 80s or 90s, or even the 2000. And it was supposed to file for bankruptcy, right? Or close to bankruptcy anyway, because they were not making money. Steve Jobs was like developing, using the money to I don't know, again, like, if you invest in Apple, you probably have a better history on that. But I seem to remember, the board didn't like Steve Jobs. They were trying to kick him out or something like that, because he was using money to develop more innovative or whatever, research and development. But the board didn't want that, because they want to make money for shareholder and all that stuff. So yeah, look at them now, but it's based on facts, not media lies. Tesla as well. Yeah, all of those companies. Look at them now, in the future it will. Yes, it's a value company. Agree. Until it's not. Yep. I like monopolies. Okay, yes, that's good. That's good on you. But monopoly has its way of not growing. If you have $1 million already, yeah, stash it in there, right? But the behemoth is going to crumble at some point, even Amazon, at some point you're going to struggle to grow even further. If you're a monopoly, you eat up all of the competition, but then, the consumer who wants something else better, they are going to shop elsewhere, right? GME is a bargain. Time to load the boat. Agree with that. Follow the truth regardless of any echoes. True. It will eventually find its way. Short can be good for the market. GME would not have any cash if it wasn't for the shorts. That's true. I mean, I'm not saying that shorts is not good for the market, okay? Yes, some company deserve to be that, but if the shorts are advantage, right? They have the advantage of stopping the buy button at any time, then how is that good for the market? You have an entity that could do whatever they want. And traditionally, that's not what the stock market is supposed to be. It's not supposed to be a casino. It's supposed to be a wealth creating machine for people who don't have the wealth, right? Or at the very least, it's supposed to be for the company, publicly traded company, to go to the public, and the public's supposed to be also benefited from that if you believe in the company, right? So the shorts, in the traditional sense, I agree with that, but do it fairly. If you short a company and the company is doing well, whether the price of the company shoot up to the sky, you deserve to lose. You really do, because what? you bet it to go die and down, down in price, but the price goes up, you deserve to lose that, right? Lose everything that you've got into that. The same for me. If I think that this company is going to survive and the company go under, I deserve to lose, right? Because I bet it with my money. See what I mean? But I invest in the company, thinking it's going to go somewhere, but it doesn't. The same also apply, or should apply. But we don't have that market right now, because the people that have the ability to short this company to oblivion have the upper hand here, because they have the media behind them, right? They have everything behind them to try to, again, to try to drive this company, even though if there's struggle already, it's the difference between, there's a difference between people getting sick and people getting murdered, right? Yeah, people are dying slowly, but why would you want to murder somebody? End it now, rather than, hey, perhaps they could heal and live longer than it actually is. So, and the same way with GameStop, right? The reason why there's so much negative sentiment is because originally the narrative is digital, yeah. Employee is not treating well. It's like, how many people have died under Amazon warehouse and all that stuff, and how many people have been taken advantage of, the subcontractor, the publisher, and all that stuff that was taken advantage of by Amazon? Many. You've heard story about those and all that stuff, but there's no media talking about it. I wonder why. But for some reason, GME is the don't touch GME for some reason, right? It's ridiculous, to say the least. But we all know what the backstory is. Now, with that being said, though, the company does have a challenge to go, right? And I'm not saying we couldn't get or we could not overcome the challenge, so to speak. I think we can. It's just going to be a little bit longer than all of us is expecting it to be. But yeah, that's why, if you want to pay attention to this company, at least have a watch list on it, right? Sit down and kind of enjoy the ride, or the spectacle that it is. You don't have to get involved in it, right? In my opinion, this is the best company for me to be in if I want to create any wealth, right? In the long term, right? And I explained to all of you before, right? I got in Bitcoin. So that's my education on the market at large, right? And to me, this is the training like that I got from Bitcoin. So all of this drop doesn't scare me one bit, right? And I understand what I hold. To me, this is valuable, right? Is it indefinitely valuable? Well, as long as Ryan Cohen could deliver me this number, this type of number, this type of balance sheets, I'm happy. Like currently, there's nothing wrong with the company whatsoever, right? Yes, sales is down, but we could increase sales in other ways. If you look at, what we're selling right now, I mean, hardware is kind of down, but again, like, business have down year, bad year, best year, and all that stuff. It really doesn't matter. What matter is whether they could have a positive income or not, right? And so that's what we are waiting for. Okay, that was a long-winded one. Sorry. Yes. Okay. Gamestop will prove all the shit wrong. Yeah. Let's see. You got me. My portfolio is only up during the last year. I have plenty of cash to jump into GME and other company. Okay, I mean, look, if you're up 20%, congratulations, Is that a did you sell? I mean, if that's the case, you must have sold already, right? Just because you're up something and you haven't sold, you're not going to appreciate. Those are just paper, right? On paper, you're up 20%. Unless you sold last year, you did not, right? And again, like if the market crash, if the S&P 500 crash, if everything going to go down, you might not be down as much because you're in the S&P 500 index fund and all that stuff. Those is a safe play. I get that. But I'm not here for a safe play, right? It's a risky thing for me, but that's just how I operate, because coming from crypto, you could, in my opinion anyway, I feel like I'm smarter than the rest, right? Again, just me. Self-proclaiming and all that stuff. But the same way too, like with GME, like I'm down massive in my portfolio, but it's my long-term portfolio. I can't touch it anyway, even if I wanted to. I could move it to something else like the S&P 500, but why would I do that? What I could do is just add more, right, to lower my cost average and, wait for the future. And so, instead of having 3 years now, I'll have 5 more years of accumulation. That's all I could do, right? And the ability for me to accumulate more based on the fact that I might be able to increase my income in that sense too. So, yeah, I'm not going to sell at a loss. Why would I do that? Yeah. I rotate some portfolio into bonds. So some magnificent. Okay, good. That's good. That's good. That's good. It's much safer for you to do that. But 20% for me is not life-changing, right? At this moment in my life anyway, I'm looking for a company that could yield me at least 20x or 10x, right, in 10 years. Now, of course, I said 10 years doesn't mean it's going to be 10 years, right? It could be 5 years or even 20 years. Who knows, right? But, I've learned that sometimes you just have to have a high conviction stock that would get you there. Because I don't have, a high income to always just park in the S&P 500 and having the ability to retire in that sense, which I do have. S&P. Sorry, I do have the 401k, but just from experience of people that are around me, they've been stashing away for like 30 years, but then they only have $250,000, right? And so those returns doesn't really yield you a life. I mean, think about it. Like even right now, $250,000 income doesn't even do anything much, right? It's considered to be like a check by check type thing, living check to check. But yeah, bond is good. I'm not knocking that at all. I mean, in my opinion here too, because GME has some security bonds already built into the company. So technically buying into GME, again, this is just my own logic here. Buying into GME, you kind of have bonds building into it already, right? And so, I mean, with the volatility of the price, depends on when it's going to go higher. But eventually, again, like as low as this is already, like I said, it's like 35 equity. If it's even lower, you're gonna get even more equity of the company buying into every shares that you have, or you want to accumulate or whatever. If you believe in the company, it's a good thing, to me, you have more of the company. Now, if the company is going under, obviously, having a 30% equity is not going to do much for you if the company go under. But, and that's why it's important for you to learn about this company from the fundamental aspect, and of course learn the backstory of what happened to this company as well, so that you see the whole complete picture of this company. I feel like I have a good sense of what's happening to this company in the past, currently, and in the future. It's I think the future is bright. I mean, you have a good leadership here, Ryan Cohen holding company and all that stuff. All of that are coming into play. I think the fact that Wedbush guy came out and say, "Oh, this is a stupid idea," every single move that GME has been doing is always a stupid idea. Oh, they should have done this. Oh, because they don't believe in the actual core of the business. Why don't you just grow the business already? It's like, because the business is actually doing what it's supposed to be doing in the market that it is provided, right? The economy is not doing well. So, of course, all the sales and all that stuff is going to be down, as expected. Nobody have any money to spend. Discretionary sector is going to kind of suffer a little bit unless we have, wage increase, which is going to happen April, tomorrow, actually. So, but that's not going to kind of go into the economy right away, right? It's going to down the road. Usually like 6 months or something, right, before you could see that wage increase to hit the economy. So hopefully, people who work at fast food is gamers, and maybe GME is going to be doing a better sell next year, right? Maybe we will beat the expectation of the Wall Street eventually, right? But as far as going under in 5 years, I doubt it. I don't think it's going to happen. Never gonna happen. I mean, you know, the company has money to spare at this moment. Okay, hold on. I'm trying to wait. Clear? No. I'm trying to. Okay. Shit. I'm gonna unhide everything here. Okay. There we go. Alright. Now, I've heard people saying comments like, oh, GME only makes $6 million a year. Last year, yes. But if you look at the next quarter, the next trailing 12, let's say Wall Street just expected us to be minus $30 million, right? So at minus 30 million, if you were to do a trailing 12 for that one, we're actually coming out ahead, $33 million or so, or $30 million in the plus. So eventually, next quarter, you're gonna be post expected loss right there. If the expected loss is indeed $30 million, we could beat that, I bet, you know, because again, we don't have much expenses to go along with that. We might close out more stores in order to do this thing. But this, again, this is me projecting that we're losing 20% of our revenue again, you know, compared to the last year. Even with that one, you know, you are going to pose around this quarter right here. No, not even down by that. Is that gonna happen with the, I don't know, again, I'm just like doing a a small little prediction here, but this is the expectation for the Wall Street. But even then, you know, you're gonna have a trailing 12 of $30 million in the plus. So from $6 million to $30 million, if we are kind of coming flat at what Wall Street projected. And so the fact that people keep saying that we're only making $6 million, it's ridiculous to say the least, right? Now, we could also beat the expectation to the point where instead of losing money, we're gonna make money, right? I mean, I'm hopeful. I'm hopeful for the first quarter of this year, but that's remained to be seen. Another 3 months, we will be able to see that number, right? But let's focus on this quarter still. I know I'm kind of long with it a little bit here, but I do appreciate all of you coming in, you know, for engagement and all that stuff. So, but yeah, so EBITDA is up. That's good. That's good for sales when you have, or sale for profit, for profitability. Because we're coming ahead. Now we're a little bit low, like less than 1% here, but we want it to be positive EBIT. If we could do positive EBIT for the whole year, that would be another indication that the company is doing much better in terms of earnings before tax and interest. Let's see. Okay, so it looks like we did some long-term investment right here. I bet that's probably like marketable security or something. Current debt. We paid them down a little bit from last quarter, last year. Long-term debt went from 400 to now 17 million. So we're paying stuff down, like, you know. Total debt we were able to reduce. And of course, we've been able to increase our book's value by 3 cents per share. We have more working capital, which is a good thing, right? Day-to-day operation. We have more to grow the company or do whatever we need to do. Shareholder equity, obviously, we were able to kind of increase it by $10 million or so. So next quarter, we're going to decrease it because, we're going to need some fun in order to make more money, I guess. As far as like the net cash position, we were kind of decrease it by 22%. So I bet we use that money in order to decrease the liability, right? Right here. Liability. So those quote unquote cash burn that we did was to decrease the liability here. Paying out some debt right there. $17 million. It's overall a good thing here. Inventory moving forward, we might have to decrease or increase the inventory. Wait, so from here to here, usually okay. I don't know, like inventory, usually that's the items that we need to store. So cash burn right here. Cash flow. So this quarter we were burning 18. I mean overall, obviously, $18 million. That's not too bad. I mean, but compared to last year though, we were able to do a lot more. So I wonder what that is. So coming from increasing by 3 million to now losing 18 million. Okay. Property equipment. Plant, property equipment. So they reduced that by 50 million. Right there. Close to 50 million. Asset. Account payable. Reduction. So these are all liability. Sorry you guys, I'm just like looking at it more closely here. Comprehensive income. What is that one? Comprehensive income. So that was the quarter end though. So this one is a trailing 12. So if I do the quarter, I want to see what's the comprehensive income is. Comprehensive income include unrealized gain and loss that do not fall under the retaining. Okay, so unrealized gain and loss. So perhaps the marketable security went down in value. Is that why? It's like So it was 71. Yeah, so unrealized gain. So that sounds like a security that is down in value for now. But again, like I don't know how long they locked in that marketable security. So I need to look at that more. Yeah. Okay, sorry. Let me look at the... oh. Okay. Jay and Emmanuel is fighting. Okay. Let me see. Jay. Why are you so emotional? Happy Easter. Why do you care so much about this, and why are you here out of place? We don't give a hoot about what you do. We know the truth here. Speaking the truth has nothing to do with the emotion. With why again do you stalk us and care so much about this? Like I said, we know why. Clock is ticking to you all, and nothing will stop the inevitable. What's coming? I explained to you before that I subscribe to all of the retail investor. I enjoy listening to them, and I follow capital mindsets and all that stuff. Okay. Full disclosure, I am also a funding member. Get along. Get along. Okay. I don't know all these backstories, you guys. Like, seems like you guys have a history there. I also funding member. Oh, sorry. Good for you, Emmanuel. You don't care. We don't care. GME will become a new blue chip company eventually. Yeah. Yeah. I mean, I don't know what qualifies as a blue chip company, so to speak. All of these terms that people use to describe stocks and all that stuff. And to me, those are just a qualifier for the reporter to pump it to the general public, right? What I know about this company right now, for GME anyway, is the fact that it has a long runway to go, right? It has a challenge that we have to face, which is the decline in sell. I agree with that, but again, as far as, like, I don't care how much we sell, right? How much do we get to keep at the end of the day? That's the most important thing. And again, to decrease the footprint to this extent, but yet still come out ahead, that is the testament to the leadership. And they do this in 3 years, you guys. Like, I mean, people who are shitting on this company is shitting on it in a minuscule, like a time horizon in which the economy doesn't provide that, that growth yet, right? Have you heard about Dollar Tree, Dollar General, and all of that? Retail are struggling right now. It's like, of course, GME is going to struggle a little bit on revenue, but we have a leadership that know that, and was able to cut 3 years ago, like little by little, in order to catch up to this point, moment in time, right? And he's doing that for the health of the company, because he's doing it in order to keep this company for a long time. Build on it layers by layers, years by year, month by month, quarter by quarter. And to see this improvement already, I see the writing on the wall here, right? And so, of course, I am going to accumulate this company until they show me otherwise, right? Like I explained before, this leadership has not disappoint me yet, right? disappoint a whole bunch of people. Okay, if you invest in this company before and see this particular sales decline, you think that the company is going under without looking at other stuff, then that's what you're missing out on, right? The company is going through a transition right now, a turnaround. And if you listen to Peter Lynch, he talks about this type of company. At the very least, put it on your watch list. If you want to shit on it, okay, shit on it for now. I mean, how many people have been shitting on Tesla? How many people have been shitting on Amazon before Amazon become a thing, right? I've brought this up before, where Jim Cramer was telling people not to hold on to Tesla when it was $10, right? Oh, you should trade this company. Don't hold on to it for long term. Well, what happened to Tesla right now, right? And so, and people who believe in Elon Musk at the time get to, reap the benefit, 15 years later. And so, those incremental change, slow little turn of profit margin really make a difference here in the long term. So, this is an accumulation stage if you are in this company or think about, going into this company. Of course, I know what I do, but I'm not going to, promote it to you guys until you know the history of this company. It could be beaten down for a long time until before it goes higher, simply because of the negative sentiment in the press right now about this company. Like I said, I'm a contrarian by nature. When people are telling me to do something, especially from the media, I tend to look at it and I was like, well, because I learned it from crypto, Bitcoin and all that stuff. Like, think about Bitcoin too. How many years has Bitcoin been shitting on by the media, by whatever? Now they're all promoting it. It's like, oh, Bitcoin to $100,000. It's like, okay, well, you should have done that. If you really care about retail, you should have done that when Bitcoin was $16,000, right? But no, they want you to sell at $16,000. They want you to buy at $60,000. See what I mean? So if you listen to the media, just be careful, right? Because right now they want you to buy into NVIDIA. They want you to buy into Dollar General, right? You've heard of that? There's so many people out there who try to steer you away. And of course, this guy here, famously, I think if you saw it right here, it's like, oh, even though NVIDIA already hyped up, or even blue chips or AI stock related one, maybe those are the one you should be getting into, right? Okay. After the hype has already been kind of at the height of the hype right now, really? Semiconductor, small companies out there, no. They haven't had any proven record, right? At least GME has a proven record. At least I know about, Ryan Cohen. So, and that's most important to for me anyway. I got in because of Ryan Cohen. Leadership, that's number one. Number two, yes, industry. Industry is growing in terms of gamers, gamings and all that stuff. The hardwares that we are able to sell. I know people, well, some people might not realize this. Hardware is the base of this company. It's like, yes, the software is one, but that's the sector that is in question right here. So for this year, we were able to do $3 billion in hardware and accessory, right? If you look at the year previously, you see hardware and accessory wasn't the biggest one. So we were able to increase, like from before Corona right here, hardware and accessory was like 2.72, and then now it's like 3 billion. See? So we were able to increase in those categories. Yes, decrease in software, but that's being addressed because of the store cuts, right? And I think leadership is doing well in that, with the economy that they're handed to. But again, like, it's not going to be doom and gloom all, like, just because this year is a terrible year for retail doesn't mean that, the next 5 years isn't. If you heard about the wage increase coming tomorrow, that's perhaps going to, stimulate the economy a little bit more, putting more money into the hands of the people that actually going to spread the money around, rather than having these billionaires who just stash money away, doing what? So, but yeah, I mean, eventually it's going to show people that this is it, in my opinion, right? Originally I thought it was going to kind of run a little bit here, but it seems like, based on what I'm seeing, so far as like the shorts and all that stuff, again, like, I don't care if you want to short this, go ahead, short some more. How much more can you short it down when people are like paying attention to this company again, right? And how can you stop this? By just doing it in a dark pool for till the end of time? Hold on, let me see. I mean, if you look at this and you still kind of question why this company is so, the price action is the way that it is. Wait, actually, not this one. Wrong company. It's like, wait a minute, this doesn't look like GameStop. Okay, so with GameStop, obviously, it's in the red. I don't know why. It's always in the red, right? And for those people who like, look, the price is down, blah, 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 blah. Here's why. There's no price discovery in this particular stock. Because look at this. Half of them are going into the dark pool. How? Right? Like off exchange. There you go. 2 million, whatever, right? And every time there's buying pressure, the price doesn't, appreciate. And we all know why, right? Now, exempt. So this is the exempt amount that's being created out of thin air. When is it going to be returned? I don't know. 50 days from now? I don't know, right? Or forevermore? Who knows what swap is happening behind closed door right here. But the market that you are in right now, it's not a real market. It's not a free market, so to speak. It's arbitrary being placed by somebody. Somebody, who thinks that GameStop should be at $6, but yet they sell it to you at $12, right? I've stated this before. So I remember Ken Griffin, had an interview saying that he should be the one because the institution should be the one who set the price for any security. How does that sound to you? How is that not a financial news? And nobody pushed back on that statement. It's curious to me that is somehow allowed. How is it legal for these people to do that? And if it should be at $6, then why when I buy it, Now it's at $12. See what I mean? It makes no sense to me. Okay, so, but yeah, I mean, I keep going back to this, and it's so ridiculous that this is somehow still, with all of these like price dropping, we're still not even reaching the run right there. So that's what I think. This is what makes me think there's something shenanigans about this company, right? In terms of the trading aspect of it, I'm not talking about the company itself here. You know, there's another thing too. Is like people kind of like they might be confused about the price of the stock versus the company itself, right? So when you kind of suffer that tide a little bit here. Of course, like, you know, the price of the stock kind of like is indicative of two people just agreeing to buy and sell towards each other. So if you think GameStop should be at, you know, 15 and you buy it now, you know, you expect it to go up in price. But if you think it should be at 6, then, you know, people who are shorting it, quote unquote, they're going to short it right here, right? And, you know, there's so many ways to short the GME. But to me, if you use the option, I think you're just going to give money to the market maker anyway, right? And this is why, like, long-term investor like Warren Buffett really reap the benefit of the traders out there, because again, they don't know the fundamental of the company. They just like, again, like based on momentum trading over here. So there's so many market participants out there that it's really hard to gauge on how valuable anything is, with the exception of the people that reads the balance sheets and understand what the company is doing. And even then, you know, you have to know what price you are willing to buy it at as well. So that's where the fair market value comes from. And so, you know, currently, yeah, I mean, if you want to wait until it dropped down to a single digit, okay, wait. I mean, that's on you, but in my opinion, I've done it before where I was waiting for you know, Bitcoin to drop, or just like, oh, I'll buy it later and all that stuff. I was forgetting about it, right? I was like, oh shit, by the time I realized it, it's already been up immensely already. I'm talking about like years ago when it was, I could have bought Bitcoin at $3,000. If I had seen Bitcoin at $3,000, I would have went all in on that one, because I know what Bitcoin is already back then. Right? And so, yeah, I mean, life happens and you forget about it, right? But for me, you know, I'm not going to miss out on GME run or whatever, right? Whatever is going to happen in this company, it's going to be fine, right? Returning positive for the first time. Market cap is like freaking less than $3 billion. Come on. You think you could buy GameStop at less than $3 billion? You know, with the inflation that's happening right now, you know, wage increase and all that stuff. So with the inflation alone, like Big Mac is supposed to be, what, $26 a Big Mac, right? That's a lot, you know, that's a lot. Anyway, Be More is the star of the show. I will continue to argue with Jay during a different screen. No, I know you guys look, I'm not looking for an argument and all that stuff, and I know like people are bears and bulls or whatever. Those arguments really, again, like to live the shows and all that stuff, those are fun to listen to. I get that, but the truth of the matter is this company is doing better. Right? The financial position of this company has been doing much better, at least from the standpoint of 3 years ago, right? From losing money left and right in terms of net income, we are turning profitable again, right? As far as growth, that's remained to be seen. I trust Ryan Cohen to do this, to be able to turn it around in 3 years. That's not a small thing to do, right? In my opinion. So another 3 years, perhaps he's going to be able to do at least $200 million a year. I thought it would be more than that, but now that the footprints is a lot lower, how did I know that? Well, if you look at the swing from year to year, right there, right? So from here to here, that's $200 million right there, right? So what is that? That's pretty substantial. And net too. I'm not saying like just for that one. Hold on. Okay, so if you do this one right here, from here to here, cash burn, what is that? Minus this and this. Like $16 million, right? For now, right? Of course, we've been paying bills over here, right? And why would we want to pay bills? Well, because we don't want to have more assets, so to speak, right? For the future, anyway, right? Incrementally. So this is a trend. If you look at the trend right here, gross profit margin a year ago compared to a year ago, that's 1 full percent, right? And from losing 3, like a negative 3.5 to now positive 0.13. And just that incremental change alone, my goodness, that's a monumental, shift when it comes to percentage, okay? That's not a small feat to do in a year, and compared to last year. So if you see this trend and you're still not a believer, I don't know what will convince you. Then wait another year if that's what you want to do. Now, as far as this one, this is the one I was saying that it should be positive, which is we're trending that way right now. So that's good. So it looks like they were diluting a little bit here in terms, I think they were promoting somebody and he was given shares. So that's good. Here we go. Of course, like the cash position is a very still high, obviously, right? It seems like this is a good cash position to have. And if you look at the marketable security right here, this is what I was talking about, how we were increasing in marketable security. If you look at that versus this one. So some of that quote unquote cash burn goes into the marketable security to increase it by that, right? If you look at the full year ahead like that. So that's what. That's $26 million increase in marketable security. So with that, I'm sure we are going to come at least, $2 million a year? I don't know. Depends. What's the rate nowadays? I think if we are doing a lower rate one, perhaps it's 5%, right? Oops. $26 million. 26 million times 5%. What is that? That's $1 million, $1.3 million a year. If you divide it by 4, that's a quarter, right? And so that money coming from interest just by parking it in the marketable security for now, right? Because again, economies doesn't promote a growing company. You don't want to grow in this environment. You want to stack the cash, right? In order to have leverage over, buying anything in bulk, right? As retail, I don't run a business, so I don't know. But if you could buy anything in bulk, negotiate the price and all that stuff, you could technically, sell it at a higher profit margin, based on the amount of cash that you have. I mean, think about how much you would be able to negotiate. Let's say everybody is scrambled for cash, right? But you're the only one with cash. So these manufacturers, they want to sell to somebody with cold hard cash because, maybe the other company was like, hey, I'm waiting for the bank to clear this fund for me and all that stuff. Meanwhile, you have GameStop's like, hey, if you sell it to me right now at 10% discount, I could get this cash to you right now. That's a good, position to be in for any company. And so now you have, you buy those bulk thing that you're negotiating, whatever they're selling, and then now you're able to increase your profit margin by that much as well, just because you are a better buyer from, wherever you want to buy in bulk from. So those things cannot be taken lightly either. Imagine if we're in debt right now, right? Trying to do business with banks as well. It's like, you think they're gonna lend it out to you? No. They're scrambled for cash themselves. So, but I think people are just so antsy. They want, Brian Cohen to do something now. Do it now. Nah, you don't have to. You just wait until everything crumble, and then you buy it at a penny on ends. Why you have to pay $10 million when you could wait until they file for bankruptcy and get it for $1 million? I don't know. Have you heard of the commercial real estate going under right now? So perhaps we could scoop some real estate ourselves. Who knows? That's what happens when you have money. You could technically do anything you want. Anything. And it's not a stupid idea to be a holding company either. Like, my goodness, like any type of shade that they could throw at this company, it's ridiculous to say the least too. And I've covered all these, news personnel before. Again, they do these things for a reason, right? To create that negative sentiment so that you're least likely to look into this company. But in my opinion, if you're listening to this, please look at the balance sheet yourself and look at the leadership yourself. If you think it's a buy, it's a buy. Don't wait. If you think it's not right now, then wait. Wait until it's, I don't know, what did Bush says? They decreased it to 560. Okay, wait until it dropped down to 560. Good luck. You might not see that, but you might see that. If that's the case, go ahead, go crazy. I wouldn't wait, in my opinion. I mean, how ridiculous is that? Like, if it goes down to that price, then the book value itself, it's 4 something already. 433 right now. So, yeah. And on top of that, the company also have $100 million to buy their stock back. Doing that. So, company has a way to protect themselves. Because of the cash on hand they have, they can't attack this company as well as they did before, right? Now, as far as like the revenue, we are eventually going to be able to address that, right? But here's another thing too. Okay, let me kind of compare this. I know I'm going on and on here. I'll read the comment in a minute. But if you were to compare the profit margin back in before Corona, let's go before Corona because, okay, let me hide this. Again, this is end of quarter, so this is kind of Corona, right before Corona right there. And then let's do that one here. Okay, 17. So back then, if you look at the amount of revenue there, right? And to see what is the... Okay, hold on, let me clear this. Let's look at cash. Let's look at... no. Current debt, maybe? Try that one. Let's look at the profit margin. Let's look at cash flow. Let's look at goodwill because that was in there. Let's look at net cash, net income, obviously, operating expense. Let's look at revenue, yes. Sorry, you guys, I am trying to be thorough here. Capital, shareholder equity, obviously, sell and... Okay, let's try those categories. Okay. So I want to look at the years. This is before Corona, right? 19, 18, 17, fourth quarter, end of quarter here. This is not a trailing 12. So if you look at the amount of money, like look at this. They were able to pull 600 million. Oh, actually, let me look at the interest payment too. I think that's what comes to play. In interest, expenses, and income. Income right here. Okay. So this is before Corona. Obviously, we came out negative, but look, we sell almost twice as like revenue, right? If you look at the revenue itself, you would have said, oh yeah, this year is a lot better than any other year, or even this one, right? I would buy a company that sells $3 billion worth of stuff over this company anytime. Well, if you only look at that, then you might be losing out on this one. Look at this. By comparison, I would buy this company rather this company, right? Does that make sense? Like if I look at the balance sheets of this company versus one, I would buy this company any day. Why? Because net income come out to be positive rather than this one, right? So what does that tells you? It tells you that this one, old leadership, are not doing as much as well as people think. And this is with a good economy too, right? Look, 18, 20, whatever, right? Around this time. Let me look at this one real quick. The other year. So 2016 was supposed to be the pinnacle of Gamestop, right? So they came out net positive of 250 right there. So if you do that, profit margin right there is 11. So imagine if we add 11 right now with this sell, with this operating expenses, right? So can we get back to that again? Of course. But by that time, when we're able to sell $3 billion again, eventually, we're going to come out even more than 250, right? Because of the profit margin, because we're a better operator than these guys, right? Now with that, if you look at the, interest payment, this is interest payment that they were, that we had to pay for the interest, right? Again, this is before Ryan Cohen got in. Now we don't have to pay anything. So any cash or any increase in income is going to come straight to GameStop again based on interest, right? We're not paying anyone anything on interest, right? Because these people, or these time when they were, before Ryan Cohen got in, they were in debt, right? Senior notes or whatever, right? In order to be able to sell $3 billion worth of sell every single quarter. Quarter four, actually. So, all of that is to show you that that profit margin. Oh, sorry. All of that is to show you that the company itself is doing better, even though sell is down, right? And here's another example of, if you were to overextending yourself by borrowing money and making the sell goes up to $3.5 billion, right? If you increase in revenue in the time that it's not supposed to be, you're going to come out at the negative, right? Because back then it was the economic downturns, okay? And this is what the problem was, is that when you overextended your asset, in good times, you're going to make more money. In bad times, you're going to lose a lot, right? And on top of that, you're not going to be able to go to the shareholder because the share price is going to be dropping as well. And so you're going to be beholden to those banks, to those people that you're borrowing money from, the senior note buyer and all. God knows who's able to buy those notes, right? Traditionally, retail don't buy those, right? Unless it wasn't an instrument that retail was able to do before that. Hold on one second. Okay, sorry. I had to check something. Okay, let's see. Okay, let me read the real quick. Okay, Ryan Cohen has only a full reign, 6 months. Yes, already looked. Okay, it's a short actually. Actually, look, manual. This is the abuse that we're talking about. What about happening? What would happen to the stock that's treating fairly? Like, play the game fair and then, yes, true. It's not a free and fair market. Abuse, yes. I know, right? Like, again, that's why I'm here, because there's something going on behind closed door that I don't know about, and that's the sentiment that I have. But also too, I know that these people have so much connection that, again, really doesn't matter in my opinion, honestly, because if you're shorting this, right, there's only a handful of people who are shorting this. Yes, retail is going to be bogged down as well. Like, yeah, retail has the sentiment that that those guys have as well, some of them, right? So retail's going to join in and all that stuff. They're going to bet against this. But no matter what you do, obviously, right, if the company's doing well, other people are going to join in. Other people that are not involved in this initially, they're going to take a look at this company and they're like, oh, what? I thought this company's going under, but look, they're net positive, right? So at some point, the sentiment's going to flip, right? At some point, people going to be like, oh, what? GME actually makes money. Oh, GME is actually doing this. Oh, right? So anything could happen to this stock, really. And downside, upside, or whatever, really doesn't matter. But in my opinion, again, like long-term investing, this is why long-term investing is the way to go, is that, well, of course, like, just my opinion here, please don't make any decision based on this. It's because you have people who battling each other for the price of this stock, right? And then, whether you think it's going to go $3, $4, but they're going to bet against it, bet for it, whatever, or options or whatever is going to come back to the, popularity again. But it's just not now because they want to suppress it so that they, whoever they are, could accumulate it at a very low price quietly, so that when it's time for them to pump it up, they're gonna send their media, to do, oh, meme stock is at it again, right? But without knowing the fundamental of the company, you wouldn't be holding this company for a long time. And whether they're betting up, betting down, or whatever, those things are going to come into play eventually into the market again. People are greedy, and these people wants to make money too. You think those banks don't know what's going on with GME? Come on, they know this, and they will try to front run you as much as possible. So whoever short this thing, obviously, you only have maybe a year of this stupid sentiment that you're spewing at this company. And yeah, you might have money to hire people to go after this company, but like I said, only a handful of you who actually shorting this thing. Like if you look at the fintech here, the information is here. Like not many people kind of like cover this at all. So they actually tells you, now again, this is a reported thing, right? Fund shorting GME, right? Only a handful. So yeah, Goldman Sachs is having puts on this. They're shorting this, right? So a lot of institutions right now, right? Tudor, I don't know who these are, but yeah, they're hold on. So this is the only one that is recent that are shorting, right? So they haven't been any institution who's brave enough to even short this thing. So this is before earnings right there. But again, they only short a little bit here. They're not like hundreds of millions of shares being shorted here at all. So the green is them increasing their position, okay? So this is them decreasing their position in the red. So if you look at the color coded here, right? And if you look at the short funded, short transaction, short volume. Okay, so average total volume 5 million right there. But then, institutional owner. Okay, so this is the one I want to show you guys right here. Not many institutions are shorting this, right? Now there are institutions who go long, right? Long and short. But those, again, they are hedging on the fluctuation of the price action for GameStop here, right? But as far as the people that are shorting this, only seven institutions, big ones, right, that are shorting this. And eventually these seven's gonna have to switch to their long position, right? Because company's not going under anytime soon. If you want 5 years horizon, okay, let's wait 5 years and see what happens. Since when does a company that make a profit going under, like, and have billions of dollars in cash to do whatever they need to do with it? Okay. Now, recently, of course, the most recent buy was from Vanguard. Okay, people were like, well, they're buying it to short it. Okay, well, they have to buy it somewhere, right? So that was back in February. That was Vanguard. And how many shares do they have? So previously they have this much, so they increased it by maybe less than 1 million shares right there. 2% ownership changes. So RC Venture right there, that's Ryan Cohen, 12% ownership. That's Ryan Cohen right there. So latest shares, that's back in 2000. Okay, so percentage change. Back in June, remember, he was adding like $10 million worth of shares. So that's why it's only increased by 1% there. But total, this is total. Oh, can you guys even see this? Shit. Let me go back. Sorry. Alright, so this is, again, this, let me go back real quick. So, I think I don't show you guys. This is institutional ownership, right? And there's a stat here. It says 7 shorts and 25 of them are long and shorts. If you look at the increase right here, of course, like incrementally increasing, I'm not saying like a gazillion shares being increased, but my opinion is that they're doing it slowly now, like accumulating it slowly, so that when they have enough, I don't know, they could short it back. Who knows? Who knows what are these people going to do? But if you in here, the long run, you know, you're not sweating at all until it plays out the way that you think it's going to play out. So if you look at the RC Venture right here, right? He owned 12% of this company. Vanguard is creeping up right now, and BlackRock. So those are the big 3 institutions. And then you have a smaller one, obviously doesn't even register, but these are the date. So slowly. You see all this parcel percentage price estimate, average price estimate, sorry. $22? What? Oh, this is an ETF. But they only bought this much. Really? Wait, am I looking at this the right way? Oh, percentage. Buh. Okay, so they increased their holding by 22%, but if you look at the amount of shares, that's not by much. I'm sure this is just a, ETF, odds ETF. You have to look those up, but they've been buying after earnings right here. Okay, so they're adding a little bit at a time here. Looks like this is a decrease. They sold, some of it sold, and then they bought it back, right? Or they buy it and then they sold it into the market. I think that's how I read it. They still have a holding here. Holding here, 0 changes. This one is negative, so they sold it here. Some of them bought some there. This one just started a new position here. This one just increased 5,000 shares. Invesco decreased by 1%. Again, this is like after earnings here. So some of them sold, some of them added more, like this one, 11,000 shares there. But yeah, go to this website if you wanted to see it for yourself here. All in all, obviously this really doesn't, tell me much about the company. That's why trading, again, it's based on price fluctuation. So this is gonna go wild for a little while. So dollar cost average down is the best strategy for anyone who want to start their position. Don't go all in, obviously. I learned my lesson as well, but do what's best for you. If you think that the company is going under, but if you look at this one right here, it's kind of curious to me that they don't even have a price target here. It's like, okay, all the price target goes down to $12.50, really? Ridiculous, right? Of course, Wedbush is the only one. Now, this is back in 2020. They did an upgrade for this one, so they haven't been. And of course, this is a downgrade. All of a sudden. Yeah. I wouldn't worry about it. But yeah, so this is just the trading aspects of things. Of course, insider, I know like some people told me that the insider was selling. I was like, where did you hear that from? Like, I don't see any filings or anything like that. Okay, so these are insiders, split adjusted. So I don't see any insider sold or anything like that. So Ryan, let's see. So trade dates. So this one. All right. So this is the last time that was the transaction, which was Larry Chain bought 1,000 shares. Alan Adel bought 50,000, right? Again, this is not recent. Obviously, we're waiting for new transaction here. Who knows, right? This is Ryan Cohen buying more, $250,000 at $22. So if you buy it now, you're buying at a lower price than Ryan Cohen. Of course, like he bought way lower than that. So noted that as well. But he's the CEO. Obviously, this is before he was a CEO. He bought in as a chairman. But yeah, I don't see any insider sold, so I don't know where that news comes from. So, hey Marantz, what's up? What's up? Thank you for joining. I'm actually like towards the end already, as you could tell. My voice is going. Happy Easter. Hope you're doing well. How's the kids' ball game? I'm not a sport person, so I usually don't care too much about sport. But I'm glad the kids has fun though. So okay, so if you look at, I'm looking at the percentage ownership of the company here. Of course, let me see. Insider ownership 1%. Like, how are they calculating this? I don't understand this. Really? Just 1%? That seems low to me. Oh, maybe they don't account for RC Venture. I think that's why. I mean, yeah, but anyway, I was looking at that, and if you look at, hold on, am I tripping? Am I tripping? Sorry, that's not normal. Let me see. Yeah, so insider ownership is here, 12%, but Fintel only tell me 1%. Why? Okay. That's short interest. Man. Okay, well, it really doesn't matter. We know RC Venture has the most. Really need to look into this more. It's like, what the hell? Right here. So they account for his portion outside. Maybe that doesn't include that portion right there. So that portion right there is already 12%. So maybe the reason why that one was 1% is because they accounted for RC Venture here. But yeah, that was a fun trip right there. Okay, so as far as the price action, I don't know. I don't know what's gonna happen to this company, right? Honestly, or I don't know what's gonna happen to the price action for tomorrow. Of course, everybody is looking into this stock right now. Don't be fooled to think that nobody is looking into this, and don't be fooled to think that somebody is selling to the point of this like ridiculous price point, obviously, right? OBV tells me that nobody is selling, like people are holding. Again, we're still, like if you look at the current position of the volume, OBV over here, we're still at 5.9 billion shares right there, right? And if you were to look at the bottom right here, see, 5.8. So it went from 5.8 to 5.9 up there, right? 5.8 to 5.9, but when it's going down here, it's still at 5.9. So that's the point that I'm trying to make over here, is that there's some discrepancy here, right there, right? Are they ping-ponging the share back and forth, to be able to drop the price this low when people are not even selling? Like, if you look at the, hold on, let me see. If you look at the Robinhood, if you still have Robinhood, and you look at the net buy for every single day, for this stock right here, for GME, net buy is actually high. It's really positive. So net buy is positive, but the price coming down. You tell me, right? To me, that's an opportunity right there, right? And in terms of the price action here, anytime there's low volume price action on the downtrend, it's actually a good thing. And traders gonna come into this company again and paying attention to it once more. And when that happens, I don't know. I just think that you see this volume picked up again. See, all 3 days, all 3 days. But look at the sell volume; it doesn't even cut in half. And that's what the on-balance volume is telling you. Buying pressure is always higher than selling pressure. And then, I'll end it here, obviously. Just be vigilant. I don't know how low it's going to come down to, but as far as today's price action, or at least coming tomorrow, $12 is like unheard of. Like, it's a big opportunity here. Obviously, this is the line. I think Moran's draw this line as well. I don't know. I just draw it because of this one right here. Right here, and right here. So we're still above that trend line. So maybe that's the double bottom that people are looking for. Like that big W, before it kind of bounced back. And again, this pattern has been prominent in this, again, W, sorry. So that's possibly going to be another pattern here. Now, people are expecting the SPY to come down because Jerome Powell came out and say that the job market was kind of overinflated. So perhaps he's gonna lower the rate sooner, to accommodate the discrepancy on the job market, to the tune of millions of jobs was being overinflated. The number was incorrect. That's what I was told. But so tomorrow, expect a downturn on the SPY. I don't know. Again, who knows? Like, they could pump it up at will. So they probably could just pump the Nvidia up and then boom, done. Who knows, right? Look at this. I was drawing that trend line. I was expecting it to come down. Of course, again, I'm not a trader here, so I used to be, but again, it was very stressful for me. But we're way over the trend line here, so expecting a pullback perhaps, or it's going to be a bigger trend line. Hold on, let me see if I could draw this. Nope, not even, huh? Maybe a weekly would be good. Look at that. That's SPY, you guys. Crazy. So a larger trend line would be here. Ooh, can it go to 600? So how long from here? 15% higher. Man, I don't know if this is the correct way to draw the trend line, but maybe if I draw this one here. No, that's not even. Again, this is what traders do, right? They look at the trend line and all of that BS. But none of that really matter. It's like having to do with the sentiment of the market. Sentiment of these people who think that they could, portfolio manager and the big institution out there. They want to take profit, show profit to people, and that's why you see those, fluctuation in price. So be careful if you're expecting it to come down or not. Don't expect a SPY to crash during the election year. I know that people are saying it all the time. But I think they're... how long do you think it's going to run until people realize this hasn't been a great year, right? For retail, even, people are struggling. And so the economy is going to catch up to the sentiment of the Main Street at some point, right? Main Street meaning like the people that are working day to day, they have less to spend. So eventually it's going to come down to the earnings of the company, back to reality, right? What is the PE ratio for SPY right now? I know I'm gonna let you guys go in a minute. Where's the PE ratio for SPY? Is there a PE ratio for SPY? I think it's like 37 or something. Oh, right here. 28. Okay, that's not the highest. You might have a point there. I think when it reached like 33, that's when it's traditionally when it's like in trouble or something. Strong performance. Okay. Alright, so the P ratio for SPY is like 26. 26. When was the crash of 2008? It was like around 33 or 30, something like that. Alright guys, that's all I have. Well, thank you everyone for joining. Jay, Michael, Gabriel, Manuel, thank you. And Lawrence.